In this short video, I'm talking about the new digital banking license issued by Monetary Authority of Singapore. Let's look at the overall application process. The application process began in Q2 2019 and the final licensee awarded in Q4 2020, and the actual digital banking operations is expected to begin in 2022. If you look at the overall applications, there were about 21 applicants submitted and 14 shortlisted, and finally 4 applicants awarded to operate the digital bank in Singapore. From the awarded date, it is expected approximately 12 months for the digital bank to meet the mass requirements and commence their digital banking business. Digital full bank license awarded to consortium of Graph Holdings and Singapore Telecommunication and an entity wholly owned by C Limited. Digital wholesale banking license awarded to consortium comprising Greenland Financial Holding Limited, Link Logics Hong Kong Limited, Beijing Cooperative Equity Investment Fund Management Corporate Limited, an entity wholly owned by Ant Group Co Limited. Under the digital banking business, all the banking services will be done online without the need to head down to the physical branch. Let's look at what are the banking services and who are all the target customers for both digital full banks and digital wholesale bank. Digital full bank focus on retail customer, whereas wholesale banks focus on small medium-sized enterprises. Digital full bank takes deposit from retail customers and provide banking services to both retail and non-retail customer segments. Digital wholesale bank provide banking service to small and medium-sized enterprises and other non-retail customer segments. Here are the requirements and activity summary for digital full bank as set by MAS. The bank should be commenced its operation in Singapore. At entry level, it has to adhere to the minimum requirements set across different sections, and it can execute its strategy and management plans and the growth projections, and over a period of time it can meet the minimum eligibility requirement to get the digital full bank license. There is no time period set by MAS, but approximately it takes 3 to 5 years for the bank to fully reach the digital full bank minimum eligibility criteria. Initially, the bank cannot accept the deposit from the public. As its progress and the intermediate supervisory reviews by MAS, it can relax the depositor cap limitations. MAS adopt the risk-based capital and liquidity rules for digital full bank. On capital rules, it's same as domestic systematically incorporated banks. On liquidity, MLA and LCR requirements as set out in MAS Notice 649. Throughout its operations, Digital Full Bank must be a member of a deposit insurance scheme. Under the interface, there are some limitations on the products the bank can offer to its customer, and it has some limitations to have the overseas markets. Up to the progression period, the bank can only allow the credit limit for an individual up to 2 times of the monthly income of an individual. There is no proprietary trading activities allowed until the bank gets digital full bank license. Throughout this phase, the bank should have only one place of business. The banks not allowed to access automatic teller machines or cash deposit machines network, but allowed to offer cashback services through electronic fund transfer at point of sale terminal at retail merchants. For the digital wholesale bank, the requirements and activities are pretty similar to the existing wholesale bank in Singapore. The bank must be incorporated in Singapore. It should have the minimum paid up capital of 100 million Singapore dollar. It also follows the risk-based capital and liquidity requirements. It has to meet the technology risk, money laundering, terrorism and financing risk, and conducting of non-financing businesses. Only allowed to operate one physical place of business. This requirement is common to both type of digital banking business. Allowed to offer Singapore current accounts for business users. Not to be allowed to grant unsecured credit facility to its retail individuals. During the assessment period, Mask has used different assessment criteria before awarding the digital bank license to its applicants. Value proposition of the business model, ability to manage prudent and sustainable digital banking business, growth prospects, and other contributions to Singapore Financial Center. Another value propositions, Mask has assessed the innovative use of technology to serve the customer needs and reach underserved segment of the Singapore market that differentiate it from existing banks. The bank assessed the level of understanding of key risk in banking business and its strength of its regulatory compliance and risk management plan. Mask has also considered the reputation, track record, financial strength, and commitment of the applicant stakeholders. Under growth prospects, the applicant has assessed the job it will be bringing to Singapore, its commitment to develop the skill of the local workforce, and the capabilities including technology it will be locating in Singapore. What is digital banking? A simple way to looking at this is your usual retail bank going fully online. Bank customer can perform these activities with the help of their mobile device or any wearable device and by going online. Digital only banks pose serious challenges to the traditional financial service industry with their entirely new banking experience. However, for most of them, licensing, scale, and profitability are the three key issues they must face going forward. Digital banks should adopt the robust technology to perform more accurate customer identity for authentications, and they have to adopt the robust technology to meet the eKYC obligations, and also they should find a ways to attract new customers. The concept of a digital bank is not something new. This concept has been adopted around the world. Here we see there are many digital-only banks open across the world with their year of launch. These initiatives are leading the race in the markets. Thank you for listening to me.